Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. Today we are in South Africa and we want to talk to the CEO of Caledonia Mining, the real successful miner in Zimbabwe. But Steve Curtis, who is with us here, is in South Africa based. So how are you? Hi. How's it going?
I'm fine, thank you. Fine, thank you, Jochen. Good to see you again.
Yeah, good to see you in good shape in those crazy times, I would say. And you guys, congratulations, had again a fantastic quarter, I must say. And I mean, your numbers are really impressive. The gross profit plus 51%, your gross revenues plus 31%. So maybe you can give us a little bit of an insight. What were the reasons for that fantastic quarter?
Certainly, Jochen. Listeners will be aware that our first quarter was not as good as we wanted it to be. Mm-hmm. So we had to attend to a number of issues and we needed to do a bit of catch up. So, the mine is capable of addressing and identifying the issues, and that's exactly what they did. And they just delivered a fantastic effort. Most importantly, it all comes down to mining the tons and moving the tons. And the second quarter at 165,000 tons is an all-time record, not just for a second quarter, an all-time record. Now, that just developed with good grade into a record number of ounces, 16,700 ounces. Mm-hmm. And we had a good gold price. Still in the second quarter, and the numbers just all come together. You get economies of scale. Mm-hmm. So an absolutely fantastic result, as you've said. Super. High percentage increases. We're very, very happy.
Yeah, fantastic. And also I'm happy as a shareholder, long-term shareholder of your company. I should say this also for disclaimer reasons. Very happy because you raised again the dividend from 12 cents to 13 cents. So hopefully we can expect now every quarter a penny.
Jochen, look at the operating cash flows. We produced over $12 million in the quarter compared to $4 million. So we've always said this is a very cash productive mine, and our intention, after many years of shareholders waiting while we invested, we said to shareholders, we will reward you. So we'll make the cash. We'll talk to you every quarter, and let's see how surprised you are.
Absolutely. No, and I must honestly say, because I was introduced to your company, I think it was December, end of November 2013. And we did the first interview there. I think it was in Mines and Money, and you guys delivered what you said. And this is quite rare. So thank you for that also as a shareholder, I must say.
Thank you.
Production in July was almost 6,000 ounces, and I think you need 6,700 ounces approximately to fulfill your 80,000 ounce projection for next year. So it looks like that you are really on a good run here. Is August also okay for you so far?
Yes, so far so good. The objective is to ramp up production in Q3 and then Q4. So that by the time we get deep into Q4, we are producing at the rate that will give us 80,000 ounces, because we've got to start January strong. And 80,000 ounces is a big target for Blanket Mine. It's never produced that amount of gold before. But as you say, we've done nearly 6,000 ounces in July, and 6,700 is the consistent target we want to achieve. And we're very happy to reiterate that guidance. So, the mining guys are telling me they're up for it. So we're excited again.
Super, perfect. And this has also due to reach that 80,000 ounces target. I saw in your balance sheet that you have spent again in the first half, of course, over $13.3 million. So I assume this was spending for the central shaft, which is now in production, which is now done, the investment almost, right?
Yeah, Jochen, our Capex, you get a big number, $13 million. Mm-hmm. It's made up of sustaining Capex, which we will always spend. You need to spend sustaining Capex. You need to spend some Capex on the finishing off of the shaft. And then there's going to be quite a lot of money spent on development, because we're effectively building a new mine underneath the old mine. We're deep into the new mine area, way below the old mine. And then again, in this first half, we spent some money on the solar farm. We spent nearly $2 million of upfront money to place orders for the solar panels and to kickstart the solar farm. So don't just look at our one Capex number and think it's all central shaft. It's not, and it is definitely changing. Central shaft is finished, but development must carry on and will carry on for a few years. Sustaining capital will always carry on, and then this year and next year we'll have solar. So you'll see some numbers coming through, but we'll make sure we explain where we're spending shareholders' money.
Super, fantastic. No, because I like that you spend the money also in the solar project. First of all, for ESG reasons, I think this is very important, but also for, let's say, the environmental, whole setup. I would say this is fantastic because I think you can generate almost 27 up to 30% of the power then, right, via solar. So this makes you also a bit more independent, I could imagine, from the grid, right?
That's really the big driving force, Jochen. It's a strategic investment. Power situation in Southern Africa, not just Zimbabwe, but in the whole of Southern Africa, is short. We want to be independent. We've spent a lot of money building a new shaft. That shaft needs consistent, good quality power. And the solar farm is part of our formula to provide good, clean power to the new project. And this is phase one. Once we've got this up and running, we'll have a look and see what phase two can bring to us, either in the forms of battery or more solar generating panels. And we would love to be completely independent of grid and the diesel gensets. But that costs a lot of money and it may take a bit of time. But that's where we should go. So solar is a very, very high focus area for us.
Fantastic. As we are just talking about ESG, how is the safety situation of the workers? I think I read that you guys had again like a real milestone that you achieved 2 million fatality-free shifts. I think that's fantastic.
Yeah, it's extraordinary, Jochen. 2 million fatality-free shifts over a period of time when we were sinking a shaft. And people who know mining know that sinking a shaft is a very, very dangerous exercise. So just alongside of the normal day-to-day mining, which is a dangerous business, and the sinking of the shaft, the production teams can be extremely proud of what they've achieved. And this all comes down to the culture that Donna Roots, our COO, has introduced into the mining space. We spend a lot of time training people, educating people, and we have a motto: you must look after your brother. You are your brother's keeper. And, if you work together on safety, then the whole plan comes together. But we've got a lot of people there now, and we have to continue to work hard. But safety comes first, Jochen.
Okay, super. That makes really sense. And I think it's also it well plays with the success of the company. Coming to exploration, you guys said last year that you have the Glen Hume property and Connemara, I think is the name of the other property. Yes. Now you said you have to write off Glen Hume. You are not exercising the option. Can you give us some reasons? Yeah, what was not met, or what, let's put it that way, what targets, objectives do you have for a new property that you say, okay, this makes really sense, we want to have that and we want to develop that?
Fine. Yes, of course, we did an exploration program. We did drilling, both RC drilling and diamond drilling for a good number of months, and we drilled thousands of meters. We found gold. And we found varying amounts of gold throughout the property, but the grade did not support an underground mine, and the widths of the reef didn't support an open cast mine. So the grade would have been good enough for open cast, but the widths were too narrow. Now that's one of the unfortunate things about exploration. You've got to know when to walk away. There may be there is gold there, and that gold quantity may be good enough for somebody else, but it was too small for us to justify an investment that would allow us to motivate to our board. So we decided not to exercise the option, and we've stopped all work on that property. And now we are focusing on the Connemara North, where we have completed a desktop geological model, and we will now, in the very, very near future, put drills on the ground there, and we will do the same exercise. We've got an idea of the sort of the volume of gold and the quality of the mineral resource base that we need to find to justify exercising the option. And remembering now, Connemara North, to exercise the option, we need to pay $5 million. And so we need to be sure that after we've spent probably $1 million plus on exploration, that there's sufficient evidence that will give us confidence to exercise. But it is exploration, Jochen. The hit rate is low. But we see it as it's the avenue for growing our business to a multi-asset business.
Absolutely. No, I fully understood, and you really have to be 110% sure before you spend such an amount of money just to pay for something where you say, oh, yeah, sorry for that. It was nothing, right? Also, I love to talk about your earnings per share and adjusted earnings per share. Can you give us an idea of what the difference is of them? And what it looks like, let's say, probably for the year. What do you expect? Or what is the target of the company?
Sure. Well, a basic earnings per share is calculated on the pure accounting profit under IFRS accounting standards. And that's got all the normal business in it, and it's got the abnormal items like write-off of Glen Hume, which is a non-recurring item. We also have large fluctuations in exchange control gains and losses in Zimbabwe because of the volatility of the currency. Now, we like to adjust out those what I will call abnormal things, because we want to show shareholders how healthy the core business is. So the adjusted earnings per share strips out the write-off of Glen Hume, it strips out any foreign exchange gains and losses, strips out deferred tax adjustments and things like that. And we produced a result for the quarter of 62 odd cents a share. Now, considering we pay 13 cents a share in our dividend on a quarterly basis, you can see that this business is generating very good cash and profits per share for shareholders. And it gives us options as a board to consider what we do with that profitability and how much do we want to retain for internal investment and forward investment, and how much are we looking forward to sharing with shareholders. But it's a mathematical exercise, the IFRS versus adjusted, but consider the adjusted EPS, the core business, and that should give shareholders an indication as to the stability of the go-forward position.
Fantastic. So that looks to me like that some further dividend raises in the future are quite likely.
Jochen, we've done it 6 times in a row.
Exactly. Thank you.
We've established a bit of a track record so far.
Absolutely. No, I really look forward to that. No, that's fantastic. Super. Yeah, thank you very much for the interview. That looks all really good. So I got the understanding that you are also satisfied so far with half of the quarter, which is run through July and half of August. And so things are looking quite good, and probably we look for another good quarter, right?
We are working very hard for another good quarter, and we need another good quarter because we have got to get our tons up, so that we are confident that we can achieve the tons that we need, which is going to be about 2,300 tons a day. And we need to prove to ourselves that we can do it this year, because the pressure is not on us to get 80,000 ounces this year. So if there are problems to be ironed out, let's iron them out this year. And let's go into the first quarter of next year with the confidence that we need to have. And 80,000 ounces is a big target. Remember, we did 58,000 ounces last year, Jochen.
Yep.
It's a big target we're asking the mine, but so far they really are delivering. So we're looking forward to a good second half of 2021, and then very excited for 2022.
Super. That was a great final sentence. Thank you very much, Steve, for your time and for the interview. And I think things look really fantastic.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Steve Curtis, the CEO of Caledonia Mining. And you heard it, the company is, on full throttle, on very good shape. Dividends are rising 13 US cents by now per quarter. And it looks like, if I interpret Steve's words and his smile on the face correct, that probably we get another good raise in the near future here on the dividend. And the company is doing great. ESG looks fantastic. The solar project is in place and really going well. So this is also fine. 2 million hours work shifts here without any fatality. So security on the mine and safety is a big thing and not an issue as of maybe in some other companies. So they're doing the right things to the right time. And I would suggest you have a look on this wonderful company. Thanks for watching us, and bye-bye from Switzerland.